today's training, we are going to base on how to make a forex trading plan. And as time goes on, there are some things that will come up as we look at that area. So let's look at how to make a forex trading plan. Now, forex trading plan is one of the key elements to becoming a successful forex trader. So many traders never even make a trading plan, and let alone use one regularly. So we need forex trading plan that we must follow. So making this trading plan will help us to see our mistakes and able to correct our mistakes. So the trading plan is just like a checklist. As an auditor, we prepare our checklist before we go for audit firm to audit a particular company. The same way with this forex, you have to do your checklist of what you want to see before you enter into the market. So it can be in a step by step, and that will give us a kind of objectives guide to trade the market. If not, we'll just be trading without focus, without direction. Now, we have to make our plan just like normal life. We have long-term plans, short-term plans. The same way in this market, we have to have a goal. Short-term goals and long-term goals, and we have to make sure we have mastered a strategy and able to implement it through the trading plan we have constructed for ourselves. So today we'll be making use of price action, as I used to say. So we have to make use of it so that we can go in depth knowledge. So now, what are the reasons we have to create this forex and this trading plan? So that our emotion will not control us. When we have trading plans, emotion will not able to come in because we are following it step by step. We are following it, and if care is not taken, we don't follow that trading plan, emotion can come in and they will affect our plans. So there is predefined all of your actions in the market. You have to predefine it. Say, oh, this is what I will do. This is what I want to see. If all these conditions are met, this is what will now take the next stage. So there are some components of trading plan. One of it is begin your trading plan with a positive affirmation. You must believe in yourself and have a positive affirmation that you will succeed in this market. Though they all say many are losers, only few are winners. Among that few that are winners, you want to be among them. So you have to have a trading plan with positive affirmation that you can say to yourself. Now the second one is state your short-term and long-term goals in trading the market. Those are the components we must have in mind. These are my short-term plans, goals. These are my long-term goals. That will close the door to quick money syndrome. It will close it conveniently, and because this is a area we can develop our skill, and there is nothing like I know it all. Nobody knows it all in this market. You learn every day. Then we have to divine your trading strategy and all aspects of how you will analyze and trade the market. Very, very important. We must define our trading strategy and all aspects of how we are analyzing and trading the forex market. Now, this other one, which is number 4, is very, very important. We will still have time to talk about it if God permit us, give us grace. Define your money management strategy. Money management on its own is a core area. After dealing with human psychology, the money management also has its own areas to play. That is, we're talking about, think about risk and reward per each trade. If it is 4 trades, if it is 2 trades, if it is 1 trade, you must know your risk and reward by each of those trades. And you must be able to divide it and make it realistic in the sense that you are consistent in what you have okay, in this market I can depart, I can give up $2, but I want to make $4, I want to make $5. Then after, if this market closes as loss, no revenge, you end the market for that day. If not, emotion will come in. You must know how much you, for each day, how much you can release to the market and how much you want to gain from the market. And I used to say that, well, to be successful in this market, you must be patient and open up to learning and know the source of your materials, because there are many people in this market that they are some are for your progress, not all are for your progress. So identify those that are meant for your progress and stick to them. Then we, in that money management strategy, we will still have time to talk more on that aspect. Now, we, this other one, we can decide on what kind of pairs we want to major on. Like for me, I love trading gold and GPP, JPY, and all its family, and because of their movements in this market, and it's also have to do, one is a London session and one is New York session, so that is one. Some they will love to trade Asian markets, and that will be AU, USD, or New Zealand USD. All those pairs they join together. Then after all this, we must double check all our analysis for that particular trade before we jump up and take the trade. So our checklist, let me give you example on the forex trading plan. Let write examples. Let me give you example on how to, we can twist it and we can make our own as we get better knowledge about forex trading plan. The first one, you can say daily trading affirmations from all those components I gave us. That's number 1. Number 2, I will say in that daily trading affirmation, I will never enter a trade without first consulting my trading plan. These things I will do, these things I will not do. So when I enter a trade, I will not touch the trade or edit the trade. That is, after placed buy or sell, I will not adjust the stop loss again or take profit again. What decision I've already concluded or made, that is where I will abide with. Because when you begin to dabbling with stop loss and take profit, emotion will come in. Emotion when you are trading 15 minutes and you are always on the system, your emotion you can see. When you trade demo accounts, the way your emotion will operate will be different from real money. And real money is the best to trade with, so that you're able to control your emotions from that henceforth. But when you trade demo, you think that you have arrived when you see the outcome. But no, put money, put equivalent of that demo amount, and you now see the reality of the market. So uh, I will never trade over my risk threshold. That is, this is my threshold. I can take it. I will not overtrade it. I will not go beyond that threshold for my risk and everything. Now, we have to predefine that in dollar risk amount, not in percentage that we'll be hearing in many places. Real money, let be defining real money. 2%, well, everyone has his own idea, but real money, so that you know how much you gain and how much you lose for that thing. So trading goals, we have to have trading goals in this part of the trading plan. How much I want to put, then we need patience and discipline in following our goals, and we have to have time to go back over our goals and review how we are making progress. Now, forex trading strategies we want to make use of, we must know it. In this forex trading strategy, we are going to have a quick recap on how to, like, for me, I love price action. So let me quickly give us the way to analyze following your trading strategy. The first thing is analyze the market condition. First thing, what is the direction the market is? Is it trending? Is it consolidating? And trending also divided into two, uptrend or downtrend. You have to know it. So consolidating in the form of ranging. So once this is determined, you note it down for your trading plan. It's part of your trading plan. As the market I'm looking at is uptrend, note it down. And you in the uptrend, there are things you want to see. In the downtrend, there are things you want to see. In the uptrend, from this cash JPY, let in this daily time frame, if we zoom out closely, you see that from this area is in an uptrend. So if you take vertical line to divide this place and you go to 1 hour to see how it looks, you will see clearly that from that you now see from here, this is higher highs, and you see the higher lows. But the opposite is the case in the lower trending and the I said we have uptrend, downtrend. So it's the opposite in the downtrending market. So once that is clear, you have got your number one stated. And if it is range, let's look at an example of range before we move out of that place. Let's start for the daily. Let's see the range. Let's take this place. You can see something happen here. Now, if you look at it before this bullish and bearish candle breakout, then I zoom in, you can now see something ranging here. So from here, you have knowledge of what market is doing. That's consolidating. Now, the number two things you have to do is draw your support and resistance. Support and resistance in this daily time frame. Draw it. You may, as a beginner, you may not able to get it perfectly now, but as time goes on and you are practicing it, and practice make perfection. So you get better knowledge of it. So from here you can see that I can see the nature, the behavior of the market. So if I ask you that this market here, what is happening? You say uptrend is going
Yeah.
because of these two.
Yes.
That's in daily. When you now go down to 1 hour, because you want to trade 15 minutes, you have to break. Don't take too much data, too much information, or else you will not be able to explain further. You cannot see what it has done around here before it starts doing all this consolidation, before you now break, then it still come down. Look at this uh, elephant candle, bullish, very bullish, close, open and close, very right. So from here you get the line. Then you must determine where it will stop, because as time goes on in this 1 hour, if the market get here, you expect something to happen around this place. So all this is what you have knowledge of. So you have to put your support and resistance. This is our resistance. This is our support will be from, you can see if you define this one in that 1 hour, this is our support. So that is clear. Any question before I move on?
Okay. Um, this support and resistance.
Yes.
There are chances that resistance will turn to support and support will turn to resistance.
That is how it will have always happen. That is how it always
So this one will
happen.
break,
Yes,
break up or
that
break
is
down.
exactly. So there are times, that is why when market is consolidating, what you are expecting is breakout.
Okay.
So when that ceiling is like a ceiling, so if you see the movement of the price action and it has momentum at that moment, it's either it break through or it break down based on what market is performing at that moment. You just need to be patient with the market and flow in the direction of the market makers. That is it. So that my support will turn to resistance at times, and resistance will turn to support. That is from where, from up, when you are coming from the uptrend, you are expecting that, oh, that uptrend is moving gradually. Times come that it will now come,
Okay.
and that support will now turn to the resistance that you cannot break through any longer. The third one here is look for price action. Look for price action. If this area, sorry, this area now, you look, this is the price action. You see that there's a demand here, and there are markets formed in a different pattern, that the lower lows now, you see that it can no longer be lower lows again. So from there, if you go to another time frame, it may be a pin bar that it will give you, but combination of 2 3 candles at times also give you a pin bar based on how you are able to spot that candle. So now, after you have able to look at the price action, let's look at this let's change this one, right click it, and click property and change it to yellow. I want to express something. Now deselect it again. If you look at this place very well, you have a confluence, you have a kind of an area in the market where two or more structures come together to form a higher probability for buy or sell. After you're able to mark step 1, step 2, step 3, you are now in step 3. You are now looking for the confluence setup. You now see that, oh, this one gives me a confluence setup that after I've passed those two, it now shows me that from the back history, there is always break out. So which means in that area I must ready to place my sell position and determine my stop loss. Like this now daily 1 hour time frame, I see and now okay, this candle is bearish candle. If you have looked at the market very well closely from the past, you know that okay, from here now
So